morning, good afternoon, and good evening to all participants. Welcome to the second day of the second UNS HPKU Fintech Summer Course, hosted by Center for Fintech and Banking UNS in collaboration with Hamad bin Khalifa University and Faculty of Economic and Business UNS. Today, we will have three modules that will be present, and for this module, we will discuss about research in fintech that will be present by Dr. Putra Pamungkas. Dr. Putra Pamungkas is a lecturer in Department of Economic Development, Universitas Sebelas Maret. He holds his doctoral degree from University of Limoges, France. He is active as a senior researcher in Center for Fintech and Banking UNS. Hi, Dr. Putra, how are you?
Okay. Hi, Alex. Pariski. How are you?
Okay, fine. Thank you for joining with us on this session.
Sure. Thank you.
Before we start the session, please pay attention to the several rules. 1. Please turn on your camera and rename your Zoom username into your student ID _ your name. It will help us to recognize you as well. 2. The Q&A session will be open after the material delivered by instructor, and you are allowed to submit your question through Zoom chat box, or simply you are also allowed to using raise hand feature. So I will help you to get access permission for live Q&A. The attendance list will be open after I request all participants to fill it. Use your student ID and name to fill the attendance list. 3. Please be respect the other student, instructor, and committee member during the session. 4. You can refer to the booklet that we already sent through email for the detailed information. Without further ado, to Dr. Putra Pamungkas, the time is yours.
Okay, thank you, Fariski, for kind introduction. Good morning, everyone from Indonesia, from Solo, from UNS. And maybe it's good afternoon and good evening in the other side of the world. Thank you very much for Thank you very much for joining this session. Basically, this session would be discussing in regards about this about research in financial technology. Especially, I will be focusing on the development of peer-to-peer lending, and we can see what happened in the literature, and also basically, I will share what we are doing in the UNS Fintech Center, our research project, several research project that we have done in this recent years to see how fintech works, how peer-to-peer lending works, and then basically how the small medium enterprises and also I will also kind of talk about this our recent research about the use of or the adoption of the digital technology on SMEs would be helpful or would be bad or something like that, and recent development of COVID-19 in regards with the adoption of the technology. And also I will share about the survey that we have done before about how banks really keeping up with the technological enhancement right now, and how banks transform to be a digitalized, and to overcome or to work side by side with the fintech, with the peer-to-peer lending, and also kind of the two collaboration, and how it can be seriously kind of work in the transformation of digitalization. Normally, this research session would be in the end of the program of the summer school, because this research in fintech, it's basically will telling or we encourage you all, the student here, especially undergraduate, or maybe some of you are graduate students, to do research in fintech, to do kind of contributing the fintech literature, because fintech development is like really not really massive right now, but the things is there. So in the academic side, it's really not much of the literature that have studied about the fintech. So this would be, I think, what we are expected here, that we can encourage you to do research in fintech for your final project, or for your final research in the final year of your study, and to see what you can do, and what you can fill the gap in the literature about fintech. So basically, if you are, but it's okay, you have this session research in fintech right now, so you can have kind of clear pictures, bigger pictures, I guess. So you can really, we expect that maybe you can write research about this fintech, and after and you know that the design and what you should investigate, that people have not already done it, and you can see the material after this. You will see the cryptocurrency here, and you will see, yesterday you have learned about this CBDC, maybe payment system, and you can see how this material fit to your final research or final project in your final years. So that's basically the aims or the goals of this session. Let me share my screen. Okay. Well, yes, as I mentioned it from this session before, we will discuss research on fintech, especially peer-to-peer lending and trends and opportunity, because now, especially in Indonesia or in other emerging market like China and Asia, peer-to-peer lending is like massively, radically growing, like very fast, and it's really not to be a threat to the banks, but it's really complement the function of the financial intermediation in financial industry right now. So what people have done, what researchers have done about this kind of development is about of the alternative of financial intermediation, or the alternative of to get the funding for small businesses, or for customer, or for working capital, or something like that. We will see what have people done in the literature. So you can see it's we will kind of discuss a very interesting result, maybe about the gender, about everything about this, the length of the payment and something like that. So we can see here after several couples of slides. So basically, fintech and banks. What do we know right now? So basically, as I mentioned before, also that fintech, the industry is really massively growing. But the study about fintech, it's really not really much about. Not really much we can see this the study, but we have seen a lot established research about a lot of things and a lot of topics regarding the banks. And what do we know? Basically, fintech it's cutting the function intermediation function. So it really as can be alternative of the of the banks. So fintech, it's really the interaction, I can say, I can tell, the interaction between the finance industry and the technological industry, or you can say information technology. So basically, the interaction between the technology and finance, it's not really new in the banking or in the finance industry right now. We can see the massive growth right now, but I think since 1950, 1970, 2000, we can see the first interaction between technology and finance. It start from the first base, like you can see the cable of the Pacific, inter-Pacific cables from the west to the east. It's in the under the sea, under the ocean. It's regarding the exchange of information of finance. So the interaction between the technology and the finance, it's already start in the phase one, when we can share the information through the cables, through, and then after that through the internet. After that we can see the ATM, the automated teller machine, that we use every day. Right now is the phase two of the development of the technology and the interaction between technology and finance. And also we can see the phase three, that you can see you can have the mobile banking right now. In the recent 10 years ago or 12 years ago, you can see the mobile banking that you can use. That is a phase three, and now we have a start at the phase four, and they try to say that the phase four is probably start now. Probably we have right now is the development of the fintech. Is the financial technology in terms of the peer-to-peer lending and the payment system, and you can see the QR code, something like that. Normally also we can predict, right? This is a prediction. This is the estimate, not estimation, but this is the prediction that maybe banks is not really necessary right now, but doing banking is necessary. It's what people say, what the books say. So the institution itself is not really really necessary right now, but the activity, the banking itself, doing the activity in banking, it's necessary. So technically, maybe this is the prediction, that maybe the company, like you can see the technological company and will have a license to do banks, will have a license like a banks, like doing banking. Right now it's already, I think several company has already introduced some features of their in their application, like in China, in Indonesia, or in Africa. Maybe in Africa they have a mobile money, but they don't use really internet. They use the normal text or normal SMS. And now we have also you have a pay later right now. You can pay, you can have your things right now, but you pay later. And you see, you can deposit some of your money in the e-wallet. You can see pay all of your needs by only tapping your phone, by only clicking on your screen, something like that. That's the phase four that we are in right now. That we are, the position of us is right now in the phase four, as literature say. So it's really the interaction of the finance and the technology is really not really new, but as you were young students or younger generation, like us, like you, we see this massive development of fintech. It's really massive right now, and it's it can be challenge for you also to see and to understand. So so this summer school is really a good opportunity for us, for you to really better understand what is going on the development of financial technology. Well, fintech, friends or foe? This is really intriguing words, like intriguing statement that fintech can be your friends, can be your foe. What kind of what does it mean? So it means like fintech can be beneficial and or can be bad for financial stability or for your financial personal financial, or maybe if it is not really well managed, I can quote unquote, it's not really well managed. Like what we find in the research of the Fang et al. Into 2020 about fintech and financial stability. Normally, the effect of the regulatory sandbox on the stability on financial institution. Here, what we mean is that the massive, the fast, the rapid development of the finance and technology is not really kind of really fast, and it's not really keeping up with the regulatory needed or regulatory framework to really regulate the fintech, to really regulate the industry itself. So what we are what does it mean here is that that the finance industry is, it's the most or is the most I see the most strict regulated industry in the world. It's really see, banks cannot do as what they want because of this very strict regulation from the regulators, especially in US, in UK, in Europe, and also in Japan, and also in Indonesia, if you were familiar with the kind of regulation. So with this kind of development of and the interaction of the technology and finance, the regulator, the regulation is not really kind of up to date to the development of the technology. So it means that kind of the regulation needs kind of the kind of scientific documents, kind of approval from the representative of the house, approval from the government, and really need kind of the settle things to be acted to or to be implemented. So the fintech itself, the phenomenon of the fintech itself is really it's really let's say 5 years ago, it's not like this in 2015, not like in 2021 right now, that we can see, we can pay everything, we can order everything on your phone, you can transfer, you can even you can exchange your money to dollars, to US dollars, to Singapore dollars, to yuan, everything, and you can see it's only on your in your pocket or in your screen of your phone. So that's coming up with this kind of a situation that regulators should and have to regulate them in order to protect the industry itself, and also the most importantly to protect the consumer, or you or us, or the customer by itself. So the protection, it's really important right now, and also it's very really kind of a serious situation, especially in Indonesia with the low financial literacy. We can see, we can discuss later after that. So what the regulators should do in this kind of matters, in this kind of things. So the like in UK, the first time to do to regulate, or to at least run together with the rapid development of the fintech, is basically using the regulatory sandbox. So this is also in UK, they are using the regulatory sandbox to really kind of before the fintech or before the platform, let's say before the platform launch their product, launch their kind of their services, they should have really listed in the regulatory, and then after that they can really do their business, and during that business the regulatory, the regulators, in this case is maybe Financial Service Authority, or maybe if it is in the payment system, maybe in the central banks. So they do the sandbox. They do the examination, the investigation, what we can do, what they cannot do, like that. So it is adopted also. We can see the learn from Indonesia. We have also the sandbox, a sandbox regulation in OJK, in Otoritas Jasa Keuangan, in Financial Service Authority, that that the fintech platforms like peer-to-peer lending should be listed in the Financial Service Authority. In this case, in Indonesia is OJK. And then they should have like the examination, a lot of interviews, and the evaluation or something like that, where they put their server, or how they treat the data. The data protection is really important in the data protection. And if you are pass of all of these tests in the FSA, you might be listed in the FSA, and you might also be like really have a license to do your business, to do the fintech business in this case, in industry, in this case. So in Indonesia, it's like a UK. We have a sandbox in FSA, and to do the kind of kind of the keeping up with the regulation, we're keeping up with the technological advancements, and also to protect the industry and protect also the customers. So in the case of Indonesia, when the financial literacy is relatively low, fintech can be can be your enemy. Why? Because here, because of the literacy lower, the literacy rate is financial literacy rate is relatively low, then people are using fintech fintech platform, especially in peer-to-peer lending, or we can see here online lending, online credit. It's really not meet with the standard of the FSA, with the standard of the sandbox. So normally here in Indonesia, we have really a lot of these kind of a fake website, a fake peer-to-peer lending that not really conduct their business properly, or conduct the business with the requirement of the FSA. In the so the consequences is the people use that not non-listed fintech in FSA. So they become this kind of the shark lending, we can say like that. So they charge the higher rate, really high rates, interest rate. So they also do some violation to collect the money or something like that. So they also misconduct the data protection. They use their data to and spread the data to all of the family and relatives, something like that. So it's this. So basically, a fintech can be your friend and can be your foe, but it depends on the regulation, on the people, financial literacy, and also the and also a lot of kind of education on this kind of financial technology, and in this case is peer-to-peer lending. Well, we have some empirical evidence research related topic on peer-to-peer lending. Basically, this is what, well, the recent article in 2019, we can see that really interesting result that we can say. I can say it's we using the platform of friend. Does a university reputation matter? So it means that if you are coming from the very good university and you are of the alumni, or you are graduate from the very reputable university, basically based on this platform of renrendai.com in China, I guess, this research find that it's really easier. It's easier, or it's for the borrowers who graduated from the project 211 is project of is the ranking of in China, I guess, the university or top, or let's say top university, to obtain the requested loan and to have higher fraction of listing funded and end of the fundraising period. So it means that if you are graduate from the reputable university in the country, in for example in Indonesia or in China, and this research find that if you requested a loan, you will get the loan quickly and easier, and also it's relatively will be fully funded. So they find like that. So it's really interesting that we see that the characteristic of the borrowers really matters in this context. So, and also we can see here from Liu and all in 2020 in possibly passed in finance and journals. Does social capital matters for peer-to-peer lending? So so other than the characteristic of the borrowers, like where you studied, maybe after this the gender, the social media or something like that, but people do kind of research on social capital. So based on the lending club in US, they found that social capital really affect borrowers and the lender. Social capital means that this is the community that you are joining, the other aspect other than the characteristic that might affect this the speed of the funding, the easy of the administrative to get listed in the platforms, and also the period of the funding fundraising period will also social capital matters. So we here again in the same platform, like a gender gap in peer-to-peer lending, what we can see here also in evidence from China. Why China? Because China is really a lot of platform there, and it's really up to the standard. Like it's really very good, a lot of good platform there, and a lot of data available right there. So when China is really big, so it's really very, and the development of the fintech is also massive. So it's really interesting to see the evidence from China. Same using the same platform, Renrendai, lending to female borrowers like is associated with the better loan performance, including lower probability of default, higher expected profit, and lower expected loss than for their male peers. So it means that we here they are asking whether there is a gender gap in the peer-to-peer lending in China, basically. So they find it turns that female borrowers or women borrowers is really better than the male peers here in this context. It turns out that they will have a better loan performance. For example, they will have a low probability of default, low kind of the failed default of the loan. So they will have also higher expected profit. So, and also lower expected loss of in the case of what they will use of this fund. So it's really interesting that a female will perform better in the fintech in peer-to-peer lending in what they are doing with the fund also. And the second one here is also very interesting. Let's see that this is the role of a parent's attractiveness. So, and loan amount in the peer-to-peer lending. So it's really, this is the evidence from the event-related potential, June 2019. You can see if you maybe some of the platform in peer-to-peer lending, they should upload your photo to you to do verification, to to prove that it's really you and really yours, the business is really yours, or it's really you. Sometimes you will need to give the photos, like give yourself, but your self pictures or your business pictures. So in this case, they find he find that the borrower's appearance and attractiveness, borrower's appearance attractiveness is modulating the lender's risk perception in peer-to-peer lending. Because the lenders, because if you were maybe yesterday you were study about about peer-to-peer lending, right? You have the lenders and you have the borrowers. So it means that the lenders will give the money, or will give the fund through the platform to the lenders that they need. So they can choose, they can really choose the project that they want, or that our lender wants to fund, right? Wants to fund. So they can really choose which kind of industry, which kind of people that you want to fund, which kind of basically you are free to choose based on your risk assessment, or based on your self assessment, or based on your kind of really personal preference, really. Yeah, there is no barrier to choose which kind of industry or which kind of the project that you want to fund. And of course, it's the first time it's the return, but but we can, if we dig deeper in this research, the borrower's appearance attractiveness is really modulating the lending risk perception. Why? Because the lenders are more tolerant when the attractive borrower default. Because attractive, in this case of females, may convey more trustworthy first impression, according to the theory of perceived risk. So if you here they find that if you see that the project is requested by the a good, I can say, good looking borrowers, it will reduce the risk perception of the lenders, and it's most likely, or is increase the probability of the lenders to give the fund for this a more appearance attractive, let's say, woman or man. In this case, is woman. So it's really in the theory of the perceived risk, because if the good-looking man, or the good-looking woman, it's in the psychology things, it's will convey more trustworthy impression. And like I say, this is the research what they find, but it might be different in several countries. It might be different in the platform, but this can be really interesting things to discuss, right? And also we have a venture capital certification and customer response. It's the from this very good journals. It's a Journal of Corporate Finance from Lee and al. 2020. It's like basically the amount of loan facilitated and the number of lenders increased significantly by 25.7% and 49.3% respectively by the number of loan facilitated and the number of lenders. And immediately after the announcement that peer-to-peer lending platform obtained a VC investment or venture capital, you will see, you will learn about the venture capital and fintech, I think next day or the day after tomorrow, but this kind of venture capital. Why? This is kind of the startup, right? The fintech platform is like a startup. They really desperately need the funding to grow, to develop. And in this case, the venture capital, the let's say the rich guy, the rich man, they have a lot of money and they want to invest in one of the platform. Let's say the easiest things is like that, the venture capitals. So they really want to invest in the startup. In this case, is fintech or peer-to-peer lending. So in this research, in this finding, they find that when the startup of the fintech, when the platform of the peer-to-peer lending receive investment from venture capitals, from the well-known venture capitals, let's say, the amount of loan facilitated and the numbers of lenders increase. Why? In this case, because it's, I think, so not I think, but they find that it's really make more confidence of the lenders more confidence to use that to use their platform, because they are already trusted by the venture capital or by the some capital investment company. So if they receive the venture capital's investment, it's really kind of really increase their confidence, increase their trust worthy of the platform, so they can use the platform. So it's really increased, really significant, like a 20.7%, and really significant increasing in lenders like 49.3%. So it's massive if you were receive the funding from the venture capital. So you will see the venture capitals more details in the, I think, in the tomorrow session with GWC, so they can really explain what really kind of venture capitals are doing in this matter. So also, because venture capital is not it's not also it's really cherry pick, right? Venture capital, if you have a money and you were to invest to someone's company, someone's startup, you need really to cherry pick. You need to pick the best of the best. You need to pick the very good. You need a very good to see whether the company is really run well and it's really have a potential to grow like that. So venture capitals, if they are not having any political or personal interest, they will choose the best of the company or particularly that have a really potential to grow. So this perception increase the psychological of these lenders to see whether they are sure, they are really convinced that this kind of platform, let's say A platform, B platform, they receive the venture capital's investment. So the lenders thinks that also the lender thinks, and also the borrower thinks, that this is very let's say really good platform, or really can be trusted like that. So because the VC is already trusted them, so it's nothing to worry, something like that. So that's why it's really increased significant, like 25% and 49%. So this is really very significant finding, and really interesting finding that you can also explore for your final research in the final years of your study, of your undergraduate or your graduates. This is really published in the very good journal, so you can see that this is this finding is not really the finding is very interesting, intriguing, and really to see a lot of things about fintech, about we are talking not how to use the fintech here in this case, in this summer course also, but we can see how they are working and how they are really what kind of things that we can investigate, we can see here in this kind of situation. So see here we can see that if you can do the research in the where you are graduated, social capitals, and you can see the perspective of the gender gap in the peer-to-peer lending or in the fintech maybe, or you can see maybe CEO, female CEO or male CEO performs better than the other peers. You can see like that. You can investigate that. And also this is really interesting that the appearance attractiveness is really increasing or reducing or modulating the lender's risk perception. And also you can see that this the venture capitals really matters in the customer response. It's just about the trust. The finance business is about the trust. So you can see, you can explore from these recent articles, from this recent findings that they have. So you can see, you can have some perspective and what you are going to do with peer-to-peer lending. It is right now, it is really limited because of the data, data that we have, especially because it is a private company and not really public company. So it's really hard to find the data. So if you have the data in your country or in your or in your or in the or in platform that you can see the data. It will end up with really good findings, because there's really not really a lot of these things going on right now. So you can write a paper up like that, a paper with this fintech, and see how it could be a very interesting finding to see, because a lot of we still have a gap in the literature in a lot of related topics, especially because right now fintech is really the flagship of this nowadays, is of the 21st century right now. So well, I will check. I will share the research that we have done in Indonesia. Basically, this is the papers that that the UNS Fintech Center working, our chairman, and we use the kind of the evidence from Indonesia, of course, because this three platform, we have used three big peer-to-peer platforms in Indonesia from 2014 and to 2018, right? So basically, we have really big data on this in this research. Is 1.2 million observation. It's really massive observation. Loans level observation. So we use this kind of methodology, you can say OLS, or logical regression, to examine the loan rate and default determinants. So we basically we investigate what cause of the loan rate, the interest rate, because in the platforms, the interest rate is really set by the platform, by their AI, or by their computing calculation based on the characteristic of your file. So sometimes you see that a person to person per se, it's really different. Will be different based on their file. Also, what really caused the default of the loan itself. So basically, we find that the riskiness level of peer-to-peer lending in Indonesia is still high, reflected by the high interest rate of this. So we also have a kind of I will tell the details later after several kind of slide. Basically, we are also doing research in fintech, so it's really really interesting to study in fintech, especially we are center to study the fintech and banking. Really happy if you can share things about this fintechs with us also. So the challenge and opportunity that we can see here, well, right now the regulators around the world, not only in Indonesia, it's encouraging the research-based evidence or evidence-based policy. We can say research-based evidence or evidence-based policy, or turns the research into an action. Turns the research into an action. So basically, we can see that the potential research that can be transformed to the action is really it's a lot. Like for example, the first, the peer-to-peer lending as a potential alternative finance. Why? Because peer-to-peer lending in this level, at this level right now, it's not really can beat the big banks. Yeah, this is obvious right now, but I don't know for the next couple of decades, right? Next 10 years, maybe as we can say, we are in the phase 4. Maybe the technological company like Alibaba, like Gojek, like a lot of tech company or the Grab in the Singapore's, and yes, I mentioned before Alibaba and WeChat and something like that can be, can have the banking, can have a bank's license like a bank's. Yeah, you see, banks is not necessary right now, but doing banking is necessary. But you can doing banking not in the bank, but you can doing banking in technological company. So basically now the growth of the branches also it's stagnant. It's not really, there is no growth in increasing the branches. The office of the, I mean, branches is office of the banks, of the office of the bank. You can see that you can open your account instantly on your phone by doing the video calls, by doing the video verification. They will send your card and they will send your the files that you need. It's really, now you can get the credit just by five minutes doing in your phone. And it's really very instantly instant. But you can see the consequences after that is you should measure. You should really know, and you should measure. You can buy your a new iPhone, a new Samsung phone from with the pay later, and you can pay later after that, but you need to pay, of course. So a lot of things like doing in this kind of research-based evidence. So peer-to-peer lending is one of the potential alternative of finance. And also the collaboration between peer-to-peer lending and the banking is also can be really interesting to study. And basically the peer-to-peer lending is not competing with the big bank, but I think it's competing with the small bank. So the competition in the area of the small banks, like a regional bank, rural banks, it's really tough. It's really I can say it's really really tough. Really the competition is really tight. So they can also like see the reducing their market. They're reducing their customer, or moving to the peer-to-peer. Basically people wants instant things, and things about the consequences later. So but this is really interesting. And also in peer-to-peer lending platform as an investment, it's you can see right now the investment is for all right now, not for also for the rich ones. So you can students like you, like us, like young people right now, it can invest everything, but by the small amount of your money, a small amount of your saving, you can invest. One of the alternative investment is also peer-to-peer lending, that they offer a really interesting return other than the other investment instrument. But it's really risky, of course, but you need to really take into account the riskiness of this platforms. And also we can talk about risk and return, and then early investors, and Also peer-to-peer lending in Indonesia. In this case, we have Islamic option or Sharia option of the peer-to-peer lending. So if you have a religious concern or beliefs concern about this kind of fintech, how they are working and how they are operating based on interest based or non-interest based, we have also a really very good platform that provide Islamic option or Sharia option, that if you have a problem with this kind of Islamic beliefs of the financial intermediation. So we have a Sharia bank, we have Islamic bank, and also we have Islamic peer-to-peer lending in several platforms. So it's really interesting. You can see, you can also research based on this Islamic and non-Islamic optional, Islamic and non-Islamic, Islamic and versus conventional peer-to-peer lending, how they are performed, how the loans performs. It's also really really good or really interesting to conduct the research on this kind of things. So I want to share our recent research in our center, in our fintech centers, that you might be I can say inspired, or you can learn and you can see how it can help your final project of your final years after this. But this one, it's sorry, this one is, I will be quickly like this. This one, it's in regard with the adoption of the digital technology for micro small business in Indonesia. Basically, here we have we surveyed in 2020, we survey small and micro and small businesses in Indonesia, how they adopt the digital technology in their day-to-day business, how they do whether they have a kind of a fintech facility in their businesses in day-to-day operation. And we also try to see whether this COVID-19 pandemics really increasing the use of the technology. As argued, we argue that you might also know that during this pandemic, start from 2020 to right now, we shift our behavior to kind of like this, to online meeting, online school, online classes, school works, meetings. Even for business, they are using the technology. So it means that we can see how the adoption of digital technology for micro small business in Indonesia. So this paper is already published in journals, in final research letters in the beginning of the first quarter, second quarter of these years. So you can read the full paper. You can search the title here in the Google, so you can see it's yourself in the detail. But I will explain just briefly what we find. So we start from the importance of the technological adoption for and capability for micro, small, medium enterprise, SMEs. By using the technology, they can improve their performance, their competitiveness, their easiness to work, to report the income and expense, to see whether this basically competitiveness and performance. They find a lot of things. People find a lot of things in research about this kind of adoption of this technological performance, technological adoption. Sorry. Well, we see now the mobile revolution. All of you can do in the split of a second in your screen, in your phone. your smartphone, particularly the mobile phone and internet, they combine together. It's open up really the possibility of innovation of the tech company, the technological company, to improve, and also the users or the SMEs to improve their business process by using the technology itself. So several factors from the kind of the let's say we can say digitalization of the SME could impact the different business models that really motivate us to determine what cause what makes SME adopt the digital technologies. So we can see that the effect of the adoption, the effect of the use or the adoption of the technological facility or technological adoption is more pronounced or is increasing during the pandemic time. So basically, as I mentioned before, that the pandemic really shift the behaviors of the people due to the kind of a lockdown situation and restriction in mobility, the moving, and etc. You forced to stay at home, and you are increasing to use the kind of online deliveries, and the SMEs is also kind of use that facility to really increase the kind of to survive, to sustain. They try to adapt using the online delivery, using the payment online payment system, using the digital marketing, let's say. So basically, we are here to clearly understand that micro small business, what barriers, what the obstacle that micro small business use of the use of the digital technology in Indonesia. And also we investigate this COVID-19 pandemic, which arguably increased the adoption of the technological facilities adoption here. So really increased significantly during the COVID-19 pandemics. So basically, we survey a lot. 2000, and it's not really why it's a lot for us. 2020, 2,222. It's really beautiful numbers of micro enterprises and small business located in Java Island, and it's really conducted online. And we have almost 30 questions for all of the SMEs. Why we choose only in the restricted area in Java Islands? Because we can see that the Java Island in several provinces, because of the lockdown policies normally happen in the Java Islands, but we really not really account for the capital of Indonesia, is like Jakarta. We are excluded that Jakarta because of different lockdown policy. And so basically, what we find, here we see a lot of variables, a lot of things that might affect the use of the technological adoption for SMEs. We have several measurements. Basically, we ask the SME, we ask the in the questionnaires, we ask the SME whether they are using online marketing. So basically, we argue that if they are using online marketing, the adoption would be or the factor that they use. It's the measurement of the adoption of the technological adoption here will be measured by they use online marketing. Also, whether they provide online payment, or online payment, you can transfer by e-wallet, you can really scan the barcode in your QR code, and then whether they whether they use online point of sales. Basically, it's online point of sales is still is platform to really it's really a platform to see to record of the transaction, to record of the, you can use all of the e-wallet, and also you can use the online delivery facilities. So we also conduct asking about the business model, the firm factors, and COVID-19 pandemics factors, and also banking exposure. So basically, what makes SME adopt the digital technologies? So here we can see the perspective from the business factors. Basically, what force or what encourage SME to use the digital technologies? The one is the competitor factors. What is competitor factors? It means that shop or SMEs or SMEs like a shop or restaurant or let's say retail, a lot of things near the SME itself that we are asking. It's they are using they are using the digital marketing, they are using the payment of sales, they are using the online payment. So it encourages, or it's really makes the SME also wanted to use the digital technology. So the digital adoption is increased because of the force or because of the pressure from the competitors. Like for example, I in my shop I have a neighbor shop, like in my left, in my right. So in my left they are using, in my right they are using. So I'm going to use also. So it's kind of like that. It's the easiest way to understand, right? So it's the pressure between my neighbors, like my shop neighbors. So it's because it's really easy to really make ease the day-to-day operation, right? So second one is the store visit. The store visit. Why is the store visit? So it means like the store visit here is really reducing. Like if you are if we ask the SME whether right now you are preferably doing the online we have no sorry the number of people who visit the store is reduced or not. So here we see that the direct selling is really reduced so basically if they are not receiving a lot of store visit directly physically, I said physically, I'm looking for that word, physically. So it means that they really kind of the business model that they impose is really increase the digital the adoption of the digital technology. It means that if my store is no longer receive any physical visit or really reduce in significant things. So this is because of the, of course, the pandemic itself, because of the you need to we forced to be stay at home, and also because of the digital technology that you can send the package by online. You can, so you use the delivery services and something like that. And also customer factors. It means customer factors here, it's the customer that really asks about whether the online payment is available or not. So for example, you as a customer, you want to buy a cup of coffee, a cup of iced coffee and you ask the owner, or you ask the barista to, do you accept e-wallet? Do you accept a kind of in Indonesia, maybe you accept OVO? Do you accept GoPay or Alipay? Do you accept online payment, something like that. That's also psychologically force the owner of the coffee shop or owner of the shop to really listen to the customer. So they also provide this kind of online payment system, point of sale system, and also, of course, online marketing. Uh, uh, it's really right now, it's a trend right now. So you can survive by doing online marketing, because all of the young generation and also old generation are using this social media. So it's really very effective way of marketing right now. So it's really interesting that we find here that competitors pressures, consumer pressure is really increasing the adoption of the digital technologies. So here we find also that really interesting result, yeah, I can say. Uh, uh, Let me put this way. Uh, younger people are most likely to use the technologies. So this is the age of the both of the company or the SME and also the owner. So if the owner is really they are younger generation, they are really native in using the technology, so they use the technology. And but for the more senior owners, or more or older generation of the owners, they are less likely to use technology in their businesses. So it is not by default. It is the argument itself is of course that the young generation is really, they understand more about this kind of the technological advancement, technological things, rather than the old generation, right? So both of the age of the company, age of the shop is also matters in this. In so basically the new the startup shop, the startup SMEs, they are tend to use the technology in their daily day-to-day business operation, rather than already established SME before. So basically it's the firm's factor is matters in this case. And also education. The higher you are educated, the higher the owner education of the higher education of the owners, they also most likely increase the use of digital technology, because normal digital technologies, the digital literacy, as we say, it really matters also in the use of this, in the use of the uh, digital technologies. Also, the coverage of internet is really matters in, in shaping or in the adoption of this kind of the adoption, digital adoptions. Of course, internet is the need, is the first, is the oil of the digital technology. So now we move to the pandemic situation. We ask whether their income is increased during the pandemic, and the selling is increasing during the pandemic. So we find that it's really interesting. We find that during the pandemic, during the COVID-19 pandemic, during the lockdown policy or restricted policy of the mobilization, the SME that have higher income and higher amount of selling, they are tends to use the digital technology. So it means that they can serve. We can conclude that all of these things, all of this technology adoption will help the SMEs, will help the shop to really sustain and to really to adapt in the pandemic and to survive basically the pandemic situation. Because in the first course of this pandemic, I think a lot of people, a lot of shop, right, are really struggling with this kind of things, but they are adapt, they are really know the situation, and they are adopt the digital things using delivery services to survive, and they really will survive. So we can conclude that kind of technological adoption will help the SME to survive this pandemic situation. We also try to differentiate between the services and the retail. It's well, but the results are the same. So basically, the service is also can have really and also the details. So it's really the same. So basically, we conclude that digital adoption will help SMEs to basically survive the pandemic. So this is one of the reasons that we find. You can as a student, you can also explore what kind of fintech or what kind of digital technology online payment in the SMEs, because for specifically in Indonesia, because we are our economy are supported by almost 90% of SMEs. So it's really interesting to study how the interaction, not only interaction between technology and finance, but we can see interaction between technology, finance, and the real business, the SMEs, the small businesses. What happened after all, and what can we learn from the situation right now? Of course, in also in the pandemic situations. So it's really interesting to study if you are. So I encourage you also to use a survey like this, and to see real data in the field, in the SMEs. But you can also use the online survey designed to because of this kind of restriction right now is still happen in Indonesia. Or we can see in several countries in Africa using the Mesa, using the mobile money. It's really very nice to read about the research about this mobile money in Africa, and because they can really can increase the saving, increase the financial literacy. It's really interesting also. Well, so I will also share one another one about this kind of what really because of the technological advancement and the development of technology and the fintech, and see that we do like a survey also about how are we questioning whether fintech really become a threat for the Indonesian bankings, for Indonesian banks, for example. So banks right now, the banks right now, as you see, especially in Indonesia, they are kind of doing a transformation. Like it's really transformed. It's really changed 100% to the digitals. So now you can see, you can open the account, you see like a 5 minutes in your phone and everything, and you can do banking in your grip of the hand. So grip of your hand. So not really need to come to the branches, to come to the office of the banks right now. So it's really we can see how the Indonesian banking is transforming by using digital technology. So I can skip here, but we have Indonesia have a lot of the population, like right now is maybe 2,270 something population. The internet user itself is almost half of them. Half of them, like 133 millions by McKinsey reports. And also the active social media users, maybe also half of them social media. It's maybe you have a second account, I don't know. Some people have a second account, so it's account that are not, I'm not sure, but half of them are having an active social media. So, and also 3/4 of them have a 3/4 of them have these kind of unique mobile users. They use a smartphone. Right now, all of people use smartphone, WhatsApp, and TikTok and everything. So basically, what kind of the banking and fintech interaction here? And now they are using the ATM, and I explained before that they use in the phase 2 we are using the ATM. Now the phase 3 we were using the mobile banking with easily, and right now in the phase 4 we are using the artificial intelligence. We are using you are using fintech. We are using the alternative platform of the financial intermediary, and it's really we cannot predict what happened next, and maybe we don't need banks, so we only need the technology tech company to do banking, maybe. And basically right now maybe it is already updated, but basically what we know is we have hundreds of 27 fintech lending platform, and that registered in OJK or in IFSA, Indonesian Financial Services Authority, and a lot of kind of 8 million, more than 8 million borrowers, and 480,000 of lenders. So we survey in regards with the awareness, readiness, and the level of advancements of this kind of transformation. So we ask whether the banks aware of this technological and development. We ask also whether they are ready in the terms of, in the case of human resource, in the case of infrastructures, and also in the face of in the case of investment, things that they need to invest, right? They need to buy a new banks, for example, for BCA, and transform them to as a digital, and whether they are already have the technology to do this kind of transformations. And also the level of environments, whether they use mobile banking or they use the EDC, or they have e-money. So we have several things. So we are trying to see the level of awareness, the level of readiness, and the level of progress in digital transformation right now. We can see oh yeah, okay, so we can see a lot of things in here. So basically we find we survey almost 60% of the asset of the bank in Indonesia. We have 20 out of the 112. So I will strictly no, I will just go fast. And so right now is happened is, before it's product centric, now become a customer centric. The banks listen to the banks, the banks listen to the customers. It's more the KYC, know your customer, KYC, kind of you know your customer by video call, by online, something like that. They are digital banking kind of shifting the business process, like for the conventional one to the digital one. Yes, they are using the big data and blockchains and something like that. Of course, the required investment is higher, and also they have really very good infrastructure to do the transformation. And also human resource is really important here for the banks also to kind of keep up with the technology. And also the risk, operational risk, it's happened one time, 2 times, 3 times it's happened, hackers attack. And kind of security and risk and operational risk is also kind of what they are concerned about, this transformation to the digital technologies. So regulatory support is also needed to see. We ask whether the regulatory support is is here or not. So they say that 70% of the respondents are not really not fully accommodated the needs of the banking industry. So some people, some respondents say that they are the regulator support the fintech, but not the transformation in digital into banking. But you see, one of them are kind of. So we asked also the perception of the banks managers about the fintech. Well, they say that fintech contributes also increase financial literacy and financial inclusion. So it's very good if you have a fintech, and also it's the new opportunity to collaborate with the and the partnership between banks and fintech. Fintechs also has a negative impact by the bank says like that. We survey the banks. Banks say that negative impact on fintech have a negative impact. So the payment transaction have decreased because of the fintech inside the program also, and also the presence of peer-to-peer lending can also reduce a bank share of microcredit. As I said before, the small banks will compete with the peer-to-peer lending. So the competition is not really matters because now the banks will not be really disturbed by the peer-to-peer lending market share. So I think maybe, yeah, I think I will stop there. So basically what we are what we are doing here is that the basically the top management of the banks in terms of the transformation technology is really they are aware of this kind of technological transformation, and also basically the regulator itself is encourage the banks to have kind of initiate the digital banking, and right now it's happened. And you can also acquire a new customer by doing the transformation and so on. So banks view fintechs from there is two angles. That positive argument argue that banks can have a really good collaboration, and also can be potential can be a competitor. So it's really education, financial literacy, and consolidation. Yeah, we find that it's really interesting that we can see by asking a question to the bank's CEO, to the bank's managers and CEO. So that's things that I can share, what research that we have done in the fintech and digital transformation, and also kind of recent literature on the fintech. And I encourage you to really dig on this topic in this fintech and digital transformation during this 1 week, so you can I think you can learn more, and you can have a project or have a research on fintech and digital technology. Okay, thank you. I will stop here, Fariski. Thank you. I open to questions. If you have any questions live or by the chat box. Thank you, Fariski. I will give the platform to you back to you.
Okay, thank you, Dr. Putra. So we are continuing to Q&A session, and in the chat box is many question, and I will read one question for you, Doctor. From Farhan WNS, believe that every technology have its own downside. So what are the upside of the technologies that bring us to this 4.0 industrial revolution? How could we overcome this problem so we can progress to 5.0 industrial revolution?
Okay, so I got so basically the question is about the downside of the technology. So is there any? Can you repeat the question? Which one is the question, Fariski?
Okay. believe that every technology have its own downside. So what are the outside of the technology that bring us to this 4.0 industrial revolution? How could we overcome this problem so we can progress to 5.0 industrial revolution?
This is still muted. So yes, thank you, Farhan, right? Farhan, for your question. So yes, of course, technology have its own downside. Really, yes, I agree on that. It's a lot of a lot of hole, a lot of lack, a lot in the technology. For example, the security, the stability of the internet. So the question is, what are the outside of the technology that bring us this 4.0 industrial revolution, right? And how we could overcome this problem so we can progress to 5.0 industrial problem. Yes, but yes, we see that the technology has really if we can see here, we have a two perspective. First, we have kind of yes, technology, the development of the technology is not perfect, but if we see the positive things of this advancement of the technology, the new development of the technologies, it's really help us really make our life easier. So this is what they call is the 4.0 revolution. This is not the industrial revolution. Basically, the industrial revolution is start 3.0. This is because of the economic growth is really boosted by the industry, but now the economic growth are boosted by the technology advancements in the finance, in the medical, in the the development of pharmacies and a lot of things like that. It's not, but we use the technology not only in finance but also in medical advancement. You see that a lot of medical tools right now, it's based on the technology. It's really helped a lot of people, and also the development of medicine, a lot of drugs, something like that. You see, get a lot of research on that can help the recent development of the disease or something like that. So really, if we see that of course the technology is not perfect, but we can see that kind of these a lot of the benefit that we can that we can use or that we can take from the development of this technology. So let me put this way, that technologies, we can not deny this advancement technology. So we need to learn, and we need to understand what's going on right now. So because of the technology will massively going after this. So we need to be with it, not watch over it, right? So okay, Mas Fariski, thank you. Farhan, thank you very much for your questions. So is there any other questions? Fariski?
Okay, there is a question from Iqbal. Most of the fintech company firms are startup business. As a student conducting research, how do we get access to the data about this firm?
Yes. That's the problem that I mentioned before in the earlier presentation. Of course, yes, the fintech companies or peer-to-peer lending companies, they are all startup, and they are really they don't want to share their data. Of course, sure, I understand that. But if you want to have the kind of research in this topic in the fintech, I think, and I can see that the Financial Service Authority (OJK) have shared a lot of data on fintech. but not really specific on the platform, but they have kind of aggregate data on the development of the fintech. You can check their website. I have checked, and they are really they have a lot of very good data that you can use to conduct your research. You can have the access freely. And also, if you want to see another side of this kind of the method of the data, you can have your own data by doing research, by doing survey, online survey, like what we done before in this presentation. Also, you can see that there will be have a more a perspective in regarding the behavior of people using the fintech. But if you want to have an access to the data, you can see it's free from the FSA, from the OJK, if you are in Indonesia. Or maybe you can if you're outside Indonesia or in the country, you can check your central banks or your financial service authority, or the Ministry of Information, or Ministry of in your country. This is the custom of your country, so you can check whether they have. But normally they provide the freely, and you can also have the data from the World Banks. You can check also that the development of the infrastructure of the internet, the SMEs or something like that. A lot of data free to use and free and publicly available in their website, so you can check. You can also contact us, UNS Fintech Center, if you have specific research and about fintech, and we can also provide the data if you want to do the research in fintech. Thank you.
To all participants, don't forget to fill the attendance on link provided in Zoom chat. To all students, this is the end of the session. Gratitude is addressed to Dr. Putra Pamungkas. Will you give your closing statement before we sign off from this room?
Hello. Yes, Fariski.
Will you give your closing statement?
Okay. Sorry, I lost you. Yeah. Sorry, I lost you like a second ago. Yes. As I mentioned before, and on, I encourage you, student, graduate student or undergraduate student, to have a research on fintech, because this topic it's really rare, and it is the time, it is the right time to do research in fintech, because of this COVID-19 pandemic. The use of the digital technology is increasing massively and really significantly. So, and you do not afraid about the availability of the data, because you can have the data by doing online survey, and you can have the data from your stakeholders, and you can ask if you have really nice research questions. Maybe they will help you a lot. So I really encourage students here to do the research on fintech, and to better understand more, and do and you can hope that this 1 week courses will deliver a lot of knowledge, sharing knowledge about this kind of the development of the fintech, and you can write papers, or write your final project in financial technology. Really encourage that. So really appreciate for all your for all participants here, for the questions, and also for the committee that have done such a very good summer courses. Thank you, Fariski. So thank you for all.
Once again, thank you for joining with us, and also share your insight based on your experience and expertise. Hope you have a good day, Dr. Putra Pamungkas.
Thank you. Good day.
Okay. After this module, we will discuss about sustainability and fintech that will be present by Dr. Mustafa Disli. I suggest you to keep paying online. You can just turn off the video and be ready again 10 minutes before next module start. I am Farsia Andika signing off from this room and see you up next session. Bye.
Bye-bye. Thank you. Thank you very much.